Good morning, everyone. Thank you once again for joining us on another episode of your weekly show, the ALG Weekly, as we do every Monday at 11:30. Today we are running late. It is our second show of the year 2021. So thank you for joining us and welcome. If you were not here last week, we would like to wish you a happy new year and let's make 2021 a great year. So without further ado, as I tell you every single Monday, this is a community-oriented show where we welcome community members, we welcome community leaders, we welcome our business owners, and we welcome those who have resources that can benefit the community so that they can share their resources with the community and make our community a better one. And today is no different than any other day. So we have exactly a business owner, we have a community leader, a friend of the African Leadership Group, Mr. Tony Frimpong. Good morning, Tony.
Hello. Good morning. How are you?
I'm doing great. How are you?
Great, thank you.
Happy New Year to you.
Yeah, same to you.
Great.
Amadou.
Thank you. So it is New Year, right? Today is January the 11th, and as a tax preparer and an accountant, this is probably you're getting ready for your busiest time in the year. Is that right?
That's correct.
All right. So it's January 31st, and there has been a lot of change regarding taxing and all of that within the past 2 years, especially with the COVID and everything. But before we get into that, when does the taxing season start? For you, it has already started, but for the ordinary people that are getting ready to file their taxes.
Okay, thank you very much, Mr. Ahmed. Let me take the opportunity to welcome the viewers. I just say, how do you call it? Happy New Year. And I just want to say thank you for joining us. I think we are in a new tax season, as you all know. Those of you in the United States who do tax filing. This tax season is going to start, it's going to take off in January 27th. Due to certain technicalities. The government has set the deadline or the start date to the 27th. But it's still not finalized. It's still might change due to certain issues. But we will inform the community or just get informed by the person who prepares your taxes, a CPA or EA or an accountant. You can get in touch with them. Or once you go on irs.gov, they update the system. But currently, the date they've set is 27th January. But like I said, it's set to change again. To
go ahead and change that. Yes, it is January the 11th, and the tax season is starting at the 27th. So before we get into the tax season, because you're a business owner, you're part of the GIROYAF accounting group. GIROYAF accounting group. So I would like to know, as a business owner and an accountant, getting ready for your busiest season or your busiest months of the year, how is that? As like, how do you go and how do you prepare to go into the tax season as a business owner and a tax an accountant?
Okay, thank you very much, Amadou. Yeah, that's a great question. That's a question we are always asked. How do we do it? And I've been in the tax preparation from 2002, and every year, I mean, we stand tall to what we do. First of all, like you rightly said, it's our season, but as an accountant, a CPA, and a EA, it's not new. All the time we are busy. Of course, from January through to December, we're kind of busy running, payrolls, running tax planning, tax preparation, auditing, tax mediation. So we're very, very busy. But because the season, usually January through to April 15th, that's where we have the peak season for most of our filers to come in, especially the individual filers who are many. Yeah. Because we've done this over a long time, we're pretty much experienced. We get our office staff ready. We get our books, of course, the new files, we get them backwards. And then we set a system, we load our softwares, we contact the tax filers, especially the business owners. We do what we call tax planning with them, because we just can't come in to file your taxes. So we send information through WhatsApp, through blast, through telephone. So we do all kinds of education. And especially another example of what I'm doing now. We go to churches, community groups, and then organizations to educate them on the do's and don'ts, especially the do's and don'ts. And as a CPA, I really lay emphasis on the do's and don'ts and what documents you needed in order to be able to file your taxes so you don't get into trouble.
Yes.
Yes. It's not easy. People think, oh, I'm just going to file my taxes, so it's pretty much very easy. Let me get 1 or 2 documents. And no, because after you have filed, what I tell people is that after you have filed, the document is sent over to the Internal Revenue. And they also have to set a system to review it, to look over it, to see if the document you give them, it's in fact credible for them to, effect the refund that you are requesting for, or the amount that probably you might be owing if it's due, whatever you're reporting. Right. So it's not just, the year is ended, let me just get 1 or 2 documents. No. You have to really prepare. I tell this to my customers or whoever gets a chance to listen to me or come to my chambers. I tell them, gather your document, the W-2s. If you work for a company and they give you a W-2 where they deducted taxes, you have to get a copy. If you are self-employed or you are a subcontractor, they give you a 1099. 1099 is actually having been paid all your income without any tax being taken out. The form is called 1099. You also got a mortgage if you own a home. They give you a mortgage form 1098. If you're in school, they give you a 1098T. If you paid student loan interest, they give you 1098. That is mortgage interest statement. If you had some savings at the bank gives you interest income statement. All this information and also another important document. If you pick or if you draw money from your 401k, which is very important, most people tend to forget. Yes, most filers in the course of the year they get the 401k, they get some money, either a loan or they were purchasing a home or they were in financial crisis, so they took part of their 401k. All these 401ks or retirement incomes that you draw, they have to be reported on your tax documents. So the company that give you those forms, the funds must give you a form called 1099-R.
Okay.
Those forms must be included in your tax filing, the documents that you are gathering for your tax filing. Very, very, very important. Usually, a lot of people forget, and if you don't include it, IRS will send you a letter called CP 2000 letter, and it's a mismatch of your income. Suppose you draw a huge amount, and because that income is a pre-tax, it's an income that you have not paid taxes on, and you have gone into agreement with Internal Revenue that I'm not going to touch this money until I'm 59 and a half or more. Okay, so if you get it before you're 59, your age 59 and a half, there's a penalty of 10%. And then the normal tax penalty, another 10%. So you can imagine if you draw an amount of like 40,000 and you haven't paid any tax, you didn't allow them to withhold any taxes, and then your regular income is maybe 60,000. You're talking of including the 2 income or combining the 2 income, you're talking of about 100,000 income. And you can know the tax liability of this income. Right. So that's in a nutshell, that is what I would say, that we help our clients to prepare for the season.
Yes.
Yeah, so they put all the documents together through the media I just mentioned.
Yes. And that's a great wealth of information that you just shared with us. I know I'm taking notes, and I hope you are out there taking notes too, because as Tony just explained, the tax process is not an easy one, and you have to be educated to know what you need to make sure that you're filing your tax and keeping yourself out of trouble. But before we get into into a little bit of the documents a person may need depending on their work, who is eligible to file for taxes? Because I think a lot of people may not know exactly what the eligibility is to file tax or the requirements.
Okay, Amadou, thank you very much. That's a very good question. In America, anybody who is of age, who is above age 18, and makes an income, a decent income, pretty much over 12,000. That is the standard deduction range. Standard deduction. You are required by law to file your taxes, whether you're students, whether you're the dependent student, or whether you're just on your own. Once you're above that age and you make that income, that is, you're required to file it. Also, if you make a 1099, if you're a subcontractor, an income over 400, you also require, the employer is required to report it as to the IRS, and you're also required to, mandated to file it on your taxes. So if you fall within this range, a category of the people or the income range I've said, then you're required to file. Yes, if nothing stops you from filing, every year the government set a date. Usually it's January 15 to April 15 or 17, depending upon if it hits on a weekend or if it hits on a Friday. Right, so that's the time set. But because of certain circumstances, they switch the dates. Like that's what I just said in my earlier report, that this year has been set, the starting date has been set to 27th January. So up to April 15th. It's very tight. And usually when they push the date like that, it's tight for us, the preparers. Because no matter what, we still have to finish whatever is given to us or whatever comes on our table before the deadline. So my advice to my viewers or my family, friends, is that if nothing stops you and you fall within any category, you have worked, you've made an income, or even you're in Social Security retirement. And if you would, some people allow taxes to be taken out of their Social Security retirements. If you do that, then you are required, or you can file it and get that income back, that refund back. So you can also file it. So if you make an income over 12,000 and you're of age above 18, and either you're dependent or you're on your own, you're required by law to file your taxes. And we have to file it within the time frame that the government has given you. The question is, what happens if I'm eligible to file and I don't file it? IRS is so good. Good in the sense that they may allow you, or they allow you 3 years. 3 years to file your taxes as an individual. You can be allowed 3 years span. The statutory limitation period of 3 years, for which you could be allowed to, could be excused of taxes for certain reasons. But the problem is that if you are owing in all these 3 taxes, you're going to be paying with penalty and interest. Interest is actually going to be starting from the season for which you have filed and you failed to file.
So it's compounded interest.
It's compounded interest. That's what you have to take note. You could be excused for 3 years. IRS is not going to come after you, but after the 3 years, if you don't file, then they're going to file it anyhow. Anyhow means that if you have some deductions, if you have some expenses that on the normal tax filing time you could have deducted it, IRS is not going to know that, hey, you didn't file your taxes and I'm supposed to help you to deduct these expenses. No, they're going to file it anyway and bring you the bill to pay with penalty and interest. And you're also going to be hit with failure to file penalty. And in fact, if you're just going to exempt yourself, they give you an option of maybe, say, an extension. Every tax season, they give you an extension up to probably 6 months, October 15th. If the tax period ends on January 15th, the extended time for you to file your taxes up to October 15th. You extended, they give you that extension. It means that you're not going to be penalized on the failure to file penalty if you file extension. But if you owe the penalty, the interest will still be accruing from January. Now you should have filed April 15th,
April 15th.
year 15th, right? And then also another thing is that if for some reason you cannot file your taxes, okay? If for some reason you cannot meet the deadline, you can also do a rough draft. The IRS accept that. You can just do a rough tax filing, and then you can amend the taxes within 3 years. You can have 3 years. What I mean draft is that rough draft is this. If for some reason you receive your W-2, I don't advise that in a way. If you come to my office and I'll ask you a series of questions. For instance, you work 3, 4, 5 jobs, and you have received only W-2 for 3 jobs. Meanwhile, in a total, you work 5 jobs. You're required by law to report all the 5 W-2s. You don't have to leave anything out. All the documents I mentioned in my earlier remarks that are required to be filed, all must come on the return one time. But if for some reason, for instance, if you might want to claim your children due to certain reasons, you may have to file the taxes because your children needs the documents to do their FAFSA. You can file the initial taxes, okay, with the document you have, and then later you have to amend the taxes within 3-year time frame. The government allows that. Right, you can amend your taxes. The only thing you have to remember to come back and amend the taxes. Sometimes the expenses that you're deducting may not be ready, and you don't want to be hit with a problem of maybe not filing, failure to file penalty. So you could be excused to just either file extension or just file initially to the IRS, and then within the 3-year time frame, you gather all your documents and come back or go to your preparer and do amended tax return.
All right. So that was clear. You do know by now what are your options if you do miss the deadline, and what can happen if you misfile your taxes, or because of any inconvenience you are not able to provide all the necessary documents. And for the eligibility, it is 18 and above. If you're 18 and above and you're making $12,000, or if you're 18 and above and you're working, you have a 1090, right?
Yeah, 1099 income.
Yeah, and that
exceeding 400.
Yep. So, that is that. So, as you started talking, we talked about how this is a rather unusual tax season, and the date being pushed, which does not give you enough time as usual. But it's also because we are in unprecedented times with the COVID and everything, and that has brought also a lot of things such as the SBA, the unemployment. So a lot of people are having to file the stimulus check. The PPP, the last one we got, and the new one that's just kicking out today. So let me start with the first question that I think I've heard a lot of people ask, is unemployment checks taxable? Are your unemployment checks taxable?
Yeah, that's a very good question. And very, very good question, especially this year, because of the pandemic, a lot of people receive unemployment income, and it is taxable. It's an income given by a third party to the IRS. As far as IRS is concerned, it's a third party. Mostly the incomes or the revenues you receive on a third party base must be reported on your taxes. So unemployment is highly recommended to be included in your tax forms that I mentioned. The W-2s, you have to get it. Unemployment for the states, especially those that came from the state unemployment, you have to include them on your tax filing. Do not leave them out. Some people say, oh, they took taxes of it, so I don't need to report it. No, it's an income. You have to report it. It has to come off on your gross income, the total or the gross income that you're reporting. Do not leave it up. If you leave it up, like I said, IRS, within a year, they will send you a letter called CP 2000. It's a mismatch letter. It's a system because, what happens is this. I because I've done this for a long time, and I teach taxes, so I love to educate the community on the taxes than even the filing, the actual doing it. I tell my clients or the people who get opportunity to listen to me every year, either in churches or the community meetings, that do not leave any income in. It's a bad thing. You know, you don't have to have the habit of not reporting, because what happens is that at the end of the year, like now, all the employers are prepared, getting all the records together. That's one of the things I do. I do payroll. So I do the W-2 filing, the 1099 filing. We submit it to IRS. The mortgage company, they submit their 1099 records to IRS. The banks, they submit all their financial records to IRS. The stocks, they submit all their information to IRS. So Internal Revenue is going to have your record on the side. And then they give you a copy. The copy is given to the employer. And then the employer also has to give a copy to the employee. So 3 parties: the employer, employee, and then IRS.
So basically...
And then 4, Social Security Administration.
Okay.
Especially the income, the W-2, 1099. Okay? Because they want to see your income. Okay. So 4 parties.
So basically then the form that you're turning into IRS is coming from them in the first place.
It's coming from our employer.
From the employer.
From the employer.
And the employer has already turned that.
Yes, the employer, like as a CPFM, we work it, like for instance, at the end of the year, haven't done your payroll. Suppose you are Walmart. You are Walmart. Haven't done all your payroll for your people. At the end of the year, we come up and generate a W-2. They call it annual filing, W-2. Okay? And then we submit it to IRS. And then a copy is also submitted to the Social Security Administration. And then as an employer, we give you copies for your keep.
Okay.
And then we also give you copies to be given to your employees. You understand? Good. So what happens is that, so as an employee, you might be receiving all your taxable or tax forms. Any form they say tax important document. They from whichever quarters or areas or avenues where you did transactions, they send it to you. Your bankers will send it to you. Your mortgage people will send it to you. Or the stock companies will send them to you. And they send copies to the IRS. So IRS has your records on file. So if suppose you receive 6 documents, W-2s, and I say, if I report 3, I might get with my 2 dependents with income of 25,000, I'm going to get possibly 9,000 refund. If I report all the income, which is about 80,000, I may pay 1,000 to IRS. Oh no, I need 9,000 to do something for my children. And then you hide 3 income, you report only 3. Now, what's going to happen? IRS is going to send you the 9,000. Yes, I call them the military people, because it's obey before complain. They will send it because they don't have a quick system where they can check the income. Sometimes they do. Sometimes they just hold the return and ask you for verification of the income. But most of the time, because they're working on very huge information as far as tax filing and also the time frame. So they will give you the income, the refund, 9,000 based upon your 3 W-2s of a total income of 25,000. Now, within a year, you receive a letter in your mail. Mr. Amadou, you receive a letter called CP 2000 mismatch. So they have records. So they're going to say unreported income this, reported income this, the difference is this. So they're going to file the taxes if you had filed it originally with all the 4 income. Sorry, all the 6 income.
So they're just going to correct the filing with the information.
You're going to correct it and bring you a proposed debt of the $1,000 that you should have paid, plus the 9,000 you received, plus the penalty and the interest and what have you. You took only 9,000, but in the end you might be ending up paying 15,000 to Internal Revenue. So that is why we educate the community or our people to avoid that. It's better to receive or to pay the little that according to the system we say you owe, or we say you're getting it.
Could that correction come anytime later than a year? Is there any possibility where when you misfile, you don't get an immediate response within a year, but they can come back in 2 or 3 years?
Not 3 years. Not 3 years. CP 2000. The system is set up. I think that's a maximum. 1 year maximum. Within 1 year, maybe 6 months. And that sometimes they even you're able to, they catch it on time. And like I said, they hold your refund or they hold your taxes, and then they call it to verification of income because they see that something is not right. Because it's a system. So what happened is that, your employer submitted the document to IRS. Now, a copy was given to your employee, okay, or a copy was given to me. Now they have to match. When you do the tax, the 6 income must match the IRS database. If it doesn't, then they hold you up for audit. It's a matter of time. So that letter may not come a month or 2 or 3, but at least within a year they will release it, depending upon the availability of wherever they have assigned it.
Great.
Yeah.
Yes. So that's really good information. I'm really learning a lot, and I hope everybody that's watching us is also learning as much as I am. But so for somebody who's out there, who is working 2 or 3 jobs and is thinking, well, whenever I get my check, there's money coming out of it. The government is taking taxes. Why do I have to file taxes? And what is really the purpose of filing taxes for people like myself who may not understand the system?
Thank you very, very, very. That's a very, very great question. I'm an immigrant myself. Originally, I'm an engineer, mining engineer. I came to the United States. I switched here. I did accounting, did MBA, and then here am I filing taxes or doing accounting business. I switched to this area for one fact. Because when I started working in America, I realized that a lot of people, especially with the immigrant, they didn't have much education about taxes. The country is built on taxes. Like I tell the people of America is built on taxes. Unlike some countries where you're not required to file taxes, especially income individual taxes. Most of the countries do business filing, but majority of the countries I know, they don't do individual filing. And what's the purpose of it? What's the purpose of filing your taxes? Like my brother Amadou said that you have worked and the company has taken his taxes, deducted whatever they want to take. And what's the need for you again to be required to file your taxes at the end of the year, and it's a compulsory in America? That's a very good question. The reason they do that is this, or the reason why tax filing is this. They give you, there's a system that they have set up, and the taxes in America, everything is centered on taxes. If you have seen the recent SBA loans, the grants that we applied for, the student loan, the mortgage, everything is centered around your taxes. That's how smart they are. That's how it's so important to be able to, take interest in tax filing. Because you might want to go to school. Like people mostly ask me, so Tony, I want to go to school. I just came to the country, I got a green card, I want to go to school. What do I do? You need to file your taxes. If you worked, no matter what the income you made, you have to file your taxes because the school is going to request your tax documents in order to be able to proceed with you as far as the financial eligibility and other things are concerned. Also, if you want to buy a home, you're going to get a mortgage. They want to know the income. They want to capture the income. They want to make sure that you make certain amount of income for which you can use to base your loan on. So that is also another way. Another way, you're looking for a loan. The financiers will tell you need to bring your income. Even in school, the children going to school, everything is centered on taxes. Okay? And so it's very important that if you really want to be involved in any of these areas that I've mentioned, you have to file your taxes to be able to qualify. Otherwise, you'll be left out. You'll be living in America, but you cannot file taxes, or you cannot go to school because you didn't file taxes. Again, let me go deep into while you deducted taxes on your income, okay, whilst working, and then they again file it. The reason why they do it this way, they've set a standard. That standard must be met by everybody. In America, it's not like Canada or UK or other countries where they just give money to children.
To children, yeah.
Like if you have children at certain age, certain week or month, they just give you money or send you a check in your mail. America's system is different. You need to prove that you have worked to be able to use that money to take care of your family, the dependents that the government is going to give the credit, tax credit to. You have to prove that you have lived with that child, and then you have supported that child. The child lived under your roof, and the child is of the age, the child minimum age to be claimed. In that way, the government will give you the credit. You understand me?
Yeah.
So which means that you have to show proof that I made an income of 30,000. Out of that, I supported my children, of course, grocery, clothing, and other things. And they lived with me. Of course, their school documents show, their Medicaid records, their addresses show my address. For that matter, I qualify to claim that child as my dependent child. So in that matter, the government will give you the credit. So now, let me take back again. I told you tax is a very broad thing. Unfortunately,
Indeed.
It's never taught. That's why I said earlier I diverted from engineering to accounting so that I'll be able in a position to educate my community in it. It's apart from immigration, tax has the next highest bill, apart from immigration in America. But unfortunately, it's never taught. Yes, apart from immigration. And then also, people think that immigration is more important than the tax filing. Yes, it is. You want to get your the stay in America. That's it. You may not, once you get your citizenship, if not filing for independence to join you, you might not, meet any of the immigration issues. But taxes, you are confronted with tax issues every year. That's why people must take note. Every year you are hit with tax preparation, tax filing. Something is happening, you need your taxes. You need to call your preparer, you need to call your accountant, you need to make sure the right thing is done. So we don't have to joke with taxes at all. Now, let me go back again. Why is it that you have worked and paid your taxes, so the government wants you to file your taxes? The reason is that they set a standard. So what it means is that I want to take the numbers to explain it so you can understand. When you're doing when you're working, the government gives you option of the federal withholding. If you so those of you who know the numbers on your W-2, the second box is called federal withholding. The IRS would withhold FICA taxes. FICA taxes is the Social Security, and then also Medicaid taxes. Medicare. Okay, that's Medicaid on the head. Social Security is for your retirement. Those are fixed. The percentages are fixed. So it's a must. Everybody across the line is gonna. So suppose you have colleagues who may be working in the same work environment. Everybody is required to pay FICA taxes. That's Social Security and then Medicaid taxes. It's fixed. It's compulsory. Now, what you'll be using to file the taxes, that's on the W-2 line 2. They call it federal withholding. That one is in your own hands. You dictate to the government how much you want withheld as far as your taxes is concerned. The government does not force you. It's not compulsory. It comes off on the form W-4 certificate, withholding certificate. The form's name is W-4. That is a form you are given after you are hired. They say, fill your tax forms. That's what it means. And that form is very, 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 very important. I hope that one of the season or one of the times I will have the opportunity, I will elaborate on that. It's a very important form, W-4. So that form, once you're working, the government will give it to you. And then you can tell them, I want to withhold single zero. I want to withhold single. I want to withhold marriage separately. I want to withhold marriage jointly. Or I want to withhold as head of household. What does that mean? Suppose I have Mr. A and Mr. B. I want to use numbers. Mr. A, they are all working Mr. A and B are all working in Walmart. They just got a green card, came back from Africa to America. They're very happy they're working. So A and B, they are all working the same job. They all have the same work rate, $10 an hour. Now, they give the W-4 to A, they give W-4 to B. Now, they ask Mr. A, fill it up. Mr. A says, ma'am, madam HR person, I don't understand the form. So pretty much, he's going to guide you to fill it. They ask you questions. Are you married? Or say, oh, yes, I'm married. How many children? I have 3 children. Then you're going to file married. Okay? So on your form W-4, you're going to file married on that form. They have helped you to fill it. Now they come back to B. Now Mr. B said, oh, Madam HR, can you please assist me in filling the form? He said, sure. He said, okay, are you married? No, I'm not married. Do you have dependents? No dependents. So of course, it's going to be checked single. You see the difference? The A has filed married 2 dependents. The B is single. Then he's not withholding any other. Good. Now, what's going to happen at the end of the year? I'm just going to take the step to explain it. Now, suppose they all work 40 hours a week. So 80 hours per paycheck, 2 weeks, bi-weekly. So every 2 weeks, the person A who claimed married, married with the 2 dependents, they're going to deduct taxes. Example, if your income is $800 for the 2 weeks, they're going to take away probably $150, just $150. They withhold $150 from his paycheck. The $150 is for federal withholding. That is what, apart from the Social Security and the Medicare, which I said is fixed percentage for everybody across board. So they withhold or they keep $150 for Mr. A. Now let's see Mr. B, who said initially single. Because he's single, his tax liability is very high. He might pay the percentage range, the tax range that he's going to be quite higher. So possibly he's going to pay $250 every paycheck. He's going to put down $250 to his federal withholding account on the W-2, box 2. The box 2, federal withholding account. Not the Social Security, not the Medicaid. Now, suppose they all work the same hours, the same rates. So every paycheck they receive that amount, or that taxes is put in each individual's account. Now let's see what happens. If they work the whole year, they're going to be 52 weeks in a year. They're going to receive 26 paychecks. 26 paychecks. So when you multiply 26 by 150, how much is going to be? Possibly, let's put it like a little under 150 plus 250. You see, even if it's 100 plus, it's going to be 2,600. So possibly maybe about 3,200. Let's put it, okay? So that is the person, Mr. A, who received, who's married and have 2 dependents. So his taxes that he has paid into his federal withholding, what he's going to use to file the tax at the end of the year, the credit he has is 3,200. You understand me? Thank you. Now let's look at B. B was withholding $250 every paycheck. So 250 times, if he's going to work the whole year, he's going to have 52 weeks in a year, he's going to have 26 paychecks. So 26 times 250.
It's probably going to be
about 6,000. Almost about 6,000. Okay? Good. Or, okay, and if not 6,000, let's put a 550, 5,500. Now, let's see what happens. When you come to me at the end of the year, then the Walmart has issued you a W-2. At the end of the year, they issue you a W-2. And those W-2s, you are required to file them. Suppose it's 40,000 for A, 40,000 for B. But let's see the difference. On the box 2, where it says federal withholding, for A, the income, the taxes is 3,200. And then for B, the taxes for withholding is 5,500. Thank you. I said I use the number so you can understand it. Now, if you come to me that you're filing, I plug the 40,000 and all the withholdings, and of course it's going to be state withholding as well. Okay, the higher, the more taxes you allow on the federal, the more taxes you allow on the state as well. So if your federal withholding that I talked about, 150, of course the state is also going to be about 6% of that amount. Okay, now if we plug the 40,000, okay, it's going to be the same. Now let's assume that the two people A and B almost have the same age, and I plug into the system. Now, when Mr. A comes, I say, Mr. A, welcome. Thank you for coming to me to file your taxes. I plug into the system. Now, I said, you have children? I said, yes, I'm married, but my wife is back home in Africa. Yeah. Do you have dependents? Yes, I have 2 children, but they're in Africa. In this way, you are single. A, he's single. I plug it in the system. The standard deduction. Now, the 40,000, the government does not tax you on all your 40,000. They give you at least some sort of break. They call it standard deduction credit. That standard deduction amount is 12,000. This year, I think about 12,200. So they will deduct 12,200 from your 40,000. So we reduce your income from 40,000 to about what? 28. To 28. Yeah. Good, to 28. So the 28 is called your taxable income. So the taxable income, you see. So, and then when you come to B, of course, I asked Mr. B, welcome for coming to me. What are you coming to? I want to file my taxes. Do you have dependent? No. Are you married? No. He's also single. The same status, filing status as A. But B, when I plug the numbers, 40,000, it's the same thing. They're going to give him standard deduction, 12,200. So that amount is going to be deducted from the income, total income of 40,000. So it's going to reduce it to 28 something.
28,000.
Now, let's see what happens. You have the same filing status. So the tax liability of the income, 28,000, might be about 12.5% that the IRS is going to deduct, it's going to require you to pay. Let's put it as about 12%. I don't know the number. I cannot get the number off head. Let's take it as about 2,500. 2,500. So that is what you are required to pay, Mr. A, because 28,000 income that you're going to be taxed now. The taxable income is going to be rolled on your based upon the status.
Your taxable income.
Yeah, taxable income. Now they will require you to pay 2,500 taxes. It's going to be the same for B. Let's see the difference. What is going to help you is that how much taxes did you pay when you were working? As far as federal withholding is concerned.
What did you allow them to be for?
You understand? So Mr. A, his credit, as far as the federal withholding tax is concerned, is 3,200. So when you subtract 2,500 as the taxes on his income, he's going to have a refund. The difference is going to be $700. Yeah. Let's go to Mr. B. Mr. B, of course, the same tax range. So, but he has a credit of 5,500. Yeah. So when you subtract the 2,500 from that amount, he's going to get about 3,000. So you see, Mr. A has got a refund, a bigger refund. Sorry, B has got a bigger refund than A. You see the difference? Now, what would have happened if the government did not require us to file it, but you can just do it anyhow? Of course, there's going to be cheating. Of course, you do whatever you want, but there's a law, so you have to go by that law. So once you allow a little more taxes to be withholdings to be deducted from your income, once you file your taxes, you get those credits back. Okay, of course, the example I gave you is just a flat example without any children, any dependent. Of course, you have dependents, and dependents come into play. If your income is low, EIC credit will set into place, and it changes other things. But in basic forms or in basic terms, that is how the tax filing is. So they set a standard. So in that way, there's a bridge for the poor or the rich. Of course, the higher your income, if you make 80,000 and you're single, they're still going to give you a tax, a standard deduction of 12,200. If they deduct it, your taxable amount is higher. So you're expected to pay more taxes. Versus somebody who works 18,000. When you deduct 12,200 from it, he has only about 5,300, which is not may not even be subjected to taxes. So in the end, that person may not pay any taxes. But somebody who makes more income, so in taxes, in science, they say the higher you go, the cooler it becomes. In taxes, it's the other way.
The higher you go,
the higher your taxes becomes. Yeah, once you fall within certain category. So what we advise is this. What we advise our viewers or our clients is this. Especially the people who fall above the middle class income range, like 6-digit figure or income range. We advise them to pay extra withholding. Okay, you may be claiming single zero, but single zero or a zero is not enough. Okay, on the W4, I think section C, it gives you an option to withhold extra dollar amount. So you may be claiming single, and then on the withholding, you can allow them to deduct $300, $50, $250, depending upon how higher your income is going to be. In that way, you sort of withholding a little more credit, so that in the end, at the end of the year, when you're filing your taxes, you will not be hit with any surprises.
So it's almost like a saving account then, if you want to use it.
If you want to use it that way. Some people also think that, I call this, when I advise it, I leave people to do whatever they want to do. I call it, you got to do what you got to do. But I had a nurse who, before he came to me about 5 years ago, he used to work in New York. And a man was makes an income of about 150,000. And every year he was owing like 15,000. Before he came to me, the previous 2 years he was owing 15 and 18,000. You can imagine. So I looked at the W2, I looked at the number, I said no. And I sat him down and I used this scenario to explain it. So you either give it to them from the beginning and in the end you're free, or you hold it and then you file your tax and the IRS will come back at you and then demand penalty, interest, and what have you. And you might not be able to pay because the income, even though you make 150,000, you may not have enough savings to pay the 15,000, the penalty, what have you. So we advise the people, if you know you're going to owe, allow a little more withholding. After single zero, I tell the people all the time, even though if you claim single zero and you make an income over 35,000, you might owe. So allow them at least $50 extra, or $100 extra, or $150 or $300. So this nurse I told you about, I advised him, and ever since he listened to me, and he's not been owing because after single zero, he allowed about maybe $300 from the paycheck, because this is somebody who received about 5,000 every paycheck. So and then out of the 5,000, he just let go $300 on top of the federal withholding to keep it, so that in the end you'll not be hit with any surprise.
Yeah, so I think that the message is loud and clear, and that example was a great one. At the end, it's better to get money than to be in debt, right? Because even though you may be getting a little less every paycheck, but I think it's better than being hit with a big with a big tax at the end of the year, $15,000 that you have to pay, or $18,000. But so I think that was a great segment, and if the people who are the community members who are watching us and are getting ready to file their taxes, I think by now they know the documents that they need, they know whether or not they're eligible to file taxes or required to file taxes, and they know exactly what to do and what not to do. But we live in a community where we also have a lot of business owners, right? So we've talked about tax as individuals, so the individual filing of taxes. How about when it comes to business? Especially this year seems to be an interesting year because of the SPS loans, and we also have the paycheck protection plan, the PPP loans. Is there anything that has changed from, let's say, from last tax season to this one that business owners need to be ready for?
Okay, thank you, Amadou. That's a very good question. Very, very good question. This year, most of the business owners were caught. Unguarded, or they were just caught, not prepared, as far as these issues are concerned, because and this COVID pandemic is an eye opener for us, business owners, to do it the right way. There are so many things that are involved as far as the business filings are concerned. First of all, you have to look at the way the entity is structured, the way the business is formed. A lot of them say, "Oh, I have a business," but he may not have any thing. In business, when you go closer, or anything that has characteristics of running a business. So it's an eye opener. It's an information which is very, very important, and I'll be coming on the platform again to explain it very, very, very well to our people, especially for the small business owners. Mm-hmm. Yeah, because the government gives so many reliefs, aids in the form of loans, in the form of grants, and either PPP loans or what have you. But how do you qualify if your business is not structured well? And somebody might ask me, Mr. Tony, what do you mean business structured well? The registration. You have to have registered your business if it's sole proprietorship, as a sole proprietorship, as a partnership, as a partnership, as a C corp, as a C corp, as a S corp, as an S corp. And majority of the people who confronted us, who came to us, especially people that don't do their business with us, mm-hmm. They don't even know how they even registered their businesses. That's the first thing to go. That's the first flaw or first red flag. As far as this, the financial relief opportunity the government gave was concerned, a lot of people did not qualify because one way or the other, they may not have registered a business, or the business might not have been registered properly, and they may not have any records, and they may be running the businesses, inappropriately. What does it mean inappropriately? Somebody runs a business. Now I have a lady who sort of purchases used items, clothes, go to Goodwill, purchase them, go to Africa, sell them. He's making a business to his own mind, her own concept. Mm-hmm. She's making a business because he buys and goes to sell it, come back, bring the money, and then he feels he's making a business. Yes. So he comes and says, "Oh, Mr. Tony, I need to get a loan for my business. What kind of business do you have?" "Oh, I buy and sell. I go to Goodwill, I get these things and put in a container, I go to sell." "Okay, let's see, what do you have? Do you have a business name?" "No, I don't have it." It may not sometimes you may not necessarily have to have a business name, but how? Because if it's a sole proprietorship, you can use your own name, your own social security. But how is it structured? Have you registered it? Do you have a EIN number for it? Have you registered with the state where you live in? Have you registered with the city of Aurora? All these are very, very, very important. So you make sure that go to an accountant. If you are in doubt, we will put our number on the platform. Contact us. We charge you just a small fee. We will help you to set up. And the business planning, we don't even charge anything, except when you're ready to do with us, and then we charge you a little fee to register your business for you. You have to get the EIN number. That's the first thing to go with IRS. Mm-hmm. Register with the Secretary of State. If it's a partnership, what does a partnership mean? People don't even understand it. He's doing a business with he and the wife, or he and the friend, Amadou and Tony, are doing businesses. And they say, "Oh, we have an LLC." It's a partnership. LLP, limited liability partnership. Limited liability company is for one person. So
LLC
and
is
it's one person. If once you break that norm of the business being owned by one person, it's a partnership. It goes in a different form called 1065. It's very, very important. I know most of you may not know all these things because you say, "Oh, I'm just going to file my taxes. I'm just going to do my business taxes." So you need an expert to explain it to you. Okay. Otherwise, you might come and you cannot do anything because what do you have? Oh, I own it with my wife. Even though it's a husband and wife, in tax form, you still consider two entities, two people. So it has to be partnership between you and your wife. It's not an LLC. If you own it yourself, it's a sole proprietorship or LLC. That's fine. That one goes in a different form, Schedule C. It is attached to your W2, and you can use your Social Security to run that. So we have to take note. So in the business one, I feel that you have an opportunity again, so I'll come on the platform to explain it, the concept. But in basic forms, what our advice is that if you own a business, either hair braiding or barbershop or buy and sell business, used cars, most people do. Other things, make sure you register it. If it's not registered, if you have not registered, make sure you have records. And at least you have an account, business account for that. Okay? You can have a business account for that one. Of course, once you go to the bank, most of the banks are very good. They ask you, they ask you a series of questions, and that way they're able to file the EIN for you. And that way you see that and then they register from the Secretary of State for you. And then you see that it's a business because the bank might require the EIN, the employer identification number, either apart from your Social Security, because you might hire somebody. You may want to give a 1099 to somebody you have paid at the end of the year. You may want to give a W2 to somebody you are running a payroll for. So in that way, you need an EIN number. Right, so it's very, very, very important. Keep the documents, keep your records, keep all the transactions in the bank account. Because that is a verdict of proof for as an income as far as IRS is concerned. IRS will not say, "Oh, every 2 weeks you pay somebody cash." No, they don't see that. That was a first flag for a lot of people who confronted us and who could not qualify for the PPP or for the SBA loans. You have to have the business structured well. You have to have the records, especially the income captured in your bank statements, because that is the verdict of proof that you're making a business. It's not like just give a physical receipt. No, IRS don't go by that. They want to make sure that those income that you supposedly you are telling them you make is captured on your bank statements. So I tell the people, deposit the money in your accounts. I took a lady through an audit, and before he had filed the taxes, because most of the money that he was receiving is cash, so he had a receipt for the vendors, people who come and do business with her. He had receipts from Mr. A, Mr. B, showing the cash payments. But at the end of the year, that lady, because he didn't have any other W2, he was using a gross receipt to file the tax, which is allowed because you're capturing all the income that you received, and then he used it to file the taxes. Unfortunately, he got audited. He had two children, dependent children. So he reported income of about 16,000 with a small expenses. He was able to get about 9,000 on the children. Of course, the EIC credit and the children credits. Now, 2 years along the line, after having filed 2 taxes, 3 years, IRS showed up. So, woman, your tax is being audited. Tax is under audit. And I helped her to go through the audit. Even though I didn't do the taxes. But once I called for the bank statements, income of 15,000 that he reported on the taxes, it was only 2,000 that is in the bank statements. You see the difference? Or you see where the problem is? Because IRS want to see the source of the income. And the person has an event center. He truly has it. He has even showcased for me before. He has an event center. I know her personally. He has records of pictures of displays and other things, So
it's a legit business.
Legit business. But is it going according to the law? because he reported only $2,000 out of the $15,000 on his bank statements. So when you put the bank statement, did a P&L, profit and loss statement, it's only $2,000 that is showing. And I asked him, Madam, your tax return shows $15,000 income. Where's the rest of the income? Oh, it was cash. Did you report it? No. IRS will never accept it. That audit was thrown overboard. They never accepted it because they said we don't have a proof that truly, legitimately, you did the business to receive that income. Like I said earlier, you have to show a proof that you've made an income to support your family, and then once you use it to do the taxes, the government will give you the credit. Of course, if you use the $2,000, he's only probably with the children, probably might get about $700. As compared to using $15,000 income, he's getting $9,000. You see? So IRS, the eye is red, you're getting a huge EIC credit. And once you're getting a huge EIC credit, IRS will never let you go. They want you to do it right. So we educate our people, especially the small businesses. The big business, we don't have a problem because it's already well structured. It's a C Corp, it's an S Corp. They have either a CP or EA or an accountant overseeing their accounts. But the people that we mostly have problem are the small businesses, hair braiders, because it's a daily thing. You know, you just get it, go use the grocery. It's sometimes very difficult. You are using the money to run the family, you know, to help the family. You have to go buy food, but deposit the money into your account and use the card or check to do the transaction so they know that you are doing some kind of business. The IRS sees it. In case of audit, you can pull the records. For me, when you come to our office, what we do is, once you let us know your business, now we call for your bank statements. As simple as that. Because when you get audited, from experience, we assist mediations and other things, in appeals and other things. That's the only way we can capture your income. That's the only way we can be confident that the income you're telling us on the tax return is accurate. Yes, apart from the W-2. We advise you open a bank statement, bank account, business account, deposit the money into it, and use it to do the transaction. So if you're buying the parts or buying the supply from the goodwill, use that account. So they see a transaction. They see a business, sort of. Other than just getting the cash, you use it, you come back, and then trying to work this math in your head. It doesn't work that way. And IRS, they may not be able to audit everybody. I tell the people that IRS is like the police officer by the roadside. You know, so many cars going at a faster speed, they may catch one. Yeah, that's how it is. They set a system, you may be a scapegoat. You're not fortunate, you may be, and then they call for audits. Or they wait, they see the system. It's a system that is structured. It sees huge EIC credits. The same year, the same pattern. They pick you for audit, and they just roll you over.
Yeah, so you may be lucky once, but don't do it.
It may not be, especially if there's the mistake is being repeated. For instance, every year you're reporting 15,000 income. You are a hair braider. Every year your income, I made 15,000. I made 15,000. I made 15,000. I mean, you'll be audited. I just want to see what's happening that you consistently be receiving 15,000 all the time.
Oh, right. Yes. We've come to the end of this show. The hour's gone by so fast. This was really an educative one for me. I have to say, maybe my favorite episode of this year. This is the second episode. But before we close, I just want to give you a chance to talk to the community, your message to the community, and your last word.
Okay, thank you, Mr. Amadou. Yes, like I said, that apart from immigration, tax has the next highest bill, but unfortunately, there's no tax education. We don't see that tax forum, where it's been organized by IRS or community, leaders or what have you. Mm-hmm. So my advice is that if you get opportunity to listen to people like us, take our numbers and call us. Okay, people do call us all over, and we license every state, the whole of the 50 states. We can do mediation, we can do appeals. I've been supporting people in New York, Ohio, when they have audits. I go in to support them as an EA. That's what I did. Enrolled agent license, go across board everywhere. So as a member of ALG family, I would advise that take your tax filing seriously. Yeah, so that you don't, come across any problems. And take advantage of some of us. And make sure you file on time. Make sure you don't get into any problem. Because another thing that most of you may not know, if you owe IRS for more than 54,000, they hold onto your passport. You cannot travel out of the country. If you owe more than $54,000 into IRS,
you cannot travel.
And it's very easy. It's because IRS will wait 3 years along the line. And if you receive, like what I mentioned, if you owe, if you take 9,000 from them, every year you might be paying about 16,000. 16,000 times 3. You're almost hitting 54,000. So we don't have to joke. Currently, I have about 6 people who are facing that problem. So we don't have to joke with what we are telling you now. Seek an advice from a profession, somebody who is a professional who knows what he is doing or what he's really doing. Don't just go to any preparer. We have been tried and tested. IRS has investigated me so many times and they could not find anything. I've been in preparation from 2002 and I pride in what I do. And my message is also work with a professional you can trust. Somebody you can really have the trust to actually confide in with your income and your tax document. Somebody who can stand by you when you have any trouble. Somebody you can call on. Somebody you can. The danger is that you file your taxes and you receive a letter from IRS or from nowhere. He's nowhere to be found. So thank you very much. I hope you will get an opportunity again to take a topic, to pick topic by topic and educate the community. That's what I really, really love to do, Amadou.
Yes,
so I hope you guys will bring me again. And like a W4, which is a major issue for people, because before people owe, it's on the W4. They don't know why they are owing. They don't know why they should even pay taxes. They want to buy homes. They come to Mr. Tony, I want to buy a home. I can't do anything if you don't have income. And also for the people that do the Uber and Lyft, that's also an area I would really, really love to educate the community. How to deduct the expenses on the Uber. And then also how to use that as a credible income to be able to purchase homes. Most people have been coming to us and we've been planning with them how you can use the self-employment income, 1099s, to because it's a specialized income. It's not like the W-2. So the mortgage companies, the financial companies are very particular about how to use it. So, and most of the taxpayers don't know. And they deduct everything to the zero. And in the end, they may not even qualify for PPP. Mm-hmm. They may not qualify for any loan because there's nothing there on the line 31 on the Schedule C. So I would really love to come back on a more detailed education so that I'll be able to support the community very well.
Yes, and we will definitely have you back. And thank you all for watching us today. It was an honor to have Mr. Tony here. And if you've been following this and you have more questions or you want to reach out to Tony, the website is www.jeroyaf, so that is JEROYAF.com, or you can get them. The phone number of the office is 303-366 1637. And thank you so much for coming and enlightening us and enlightening the community. And as I say always, that's our promise with us. The promise of ALG Weekly is to bring you every week community members, community leaders, business owners, and people who have resources that can benefit our community so that we can be on our way and becoming a stronger community. Thank you for joining us today, and we'll see you next Monday. And I just want to say next Monday we have a very, very, very special panel. It is going to be Monday the 18th, and that's Martin Luther King Day. So please join us next Monday. Before that, though, we do have our home ownership. We do have our home ownership workshop this Wednesday. We have our home ownership workshop on Wednesday. So if you want to join that, if you want to learn more about your credit, better your credit, or you want to get yourself into a home, we have all the expertise that you need in one place. It is a one-stop shop where you can get everything from credit all the way to getting the keys to your house. On Monday, the 18th as well, we do have our legal clinic here at the African Leadership Group. And on Thursday, January 28th, we have our last event of January 2021, and that will be our business workshop. Mr. Tony gave us a lot of information about business workshop. So if you're interested in opening your business, or perhaps you've had your business and want to do it the right way, please join us on Thursday, January 28th. So thank you very much again, and we'll see you next Monday. Goodbye.